What's going on, everybody? This is Marcus, and I'm here with my lovely wife,
Shira.
and we would like to welcome you to another episode of the Black, Married, and Debt-Free podcast. Now, Shira, we got to address some things. We got to address some things like the numbers on the house. But before we do, we would like to thank everyone who's been leaving us 5-star reviews on our podcast. Keep that coming. And when you do that, please email us. Once you've done that, BlackMarriedDebtFree@gmail.com, because we have a special gift for you. We're going to be giving you a link to our Get Out of Debt and Start Building Wealth Masterclass. We can't thank you enough for the reviews, because that's currency to any podcast that you listen to. So we appreciate it. Shire, let's get into this, man. So I had one of our listeners, actually one of our guests on the podcast, sent me a DM, and it was a reel from Titan in this space, Earn Your Leisure. Earn Your Leisure, they did a reel speaking on Wells Fargo and some major discrepancies that we're going to get into in regards to their lending practices. Now, before we really dig on this, Shire.
Yeah.
Hey, we partnered with Wells Fargo before, right?
Yes, we have.
We did some influencer work, right? We got in our influencer bag with Wells Fargo. We have worked with Wells Fargo on, I want to say,
it was a series around home buying.
Yeah.
For Black families. And so we were reached out to and asked if we would be one of their speakers for a mini series that talked about barriers to home ownership.
Right.
And when I see what we're about to discuss further, it's like, y'all kind of had me out here looking like a fool.
Me out here looking real.
Looking like a fool, because when I talked about, or when we talked about, the importance of home ownership to the Black community and some of the barriers to home ownership, we talked about things like a barrier being like not being informed on the process. A lot of people are concerned with raising their credit score.
We were looking introspectively,
a lot of people,
right?
Yes, it like
very introspective.
Yes, and that's important, right? We talked
Yes.
about student loan debt being a barrier to not just people of color, but really everybody. But anyway, but I'm saying, valid things. But really, the barrier to home ownership is not just the person; it's the system that we're interacting with. And so, I mean, we have to say that, and we don't do a whole lot of partnerships and a whole lot of influencing.
Luckily, we don't have to do that, right? Luckily, that's not a necessity for sustenance for us.
We go to work every day.
Work,
you know what I'm saying?
I like that.
Right.
You know what I mean?
But I thought that it would be something positive.
Yes.
Who else was on there with us? Was it someone from was it the Urban League?
National Urban League.
Yeah,
representative from National Urban League.
Yes.
I forget his name.
Yeah.
But we were in good company.
Yeah. And, they partnered up with, us with someone, the head of, I don't know which department in Wells Fargo, was a black, black lady.
A sister.
Yeah. And, it was just us folks having a colorful conversation. But
and Shad, before you dig more,
okay,
we have our own experience with Wells Fargo. We've used Wells Fargo on, I think, a number of our rentals.
Yeah.
They're kind of our go-to, right?
They be getting on our nerves sometimes.
They get on our nerves.
I'm just going to let it out, okay? But anyway,
we've closed the deal.
We have closed the deal with Wells Fargo. And not all experiences have been negative. So it wasn't that like we had all these negative experiences and we decided to do it with them.
Right.
Some of it, it worked out in the end.
Yeah.
But with that being said, we do want to talk about the latest news when it comes to Wells Fargo and what. Go ahead. You got.
I'm sorry, Sean. I'm cutting. I'm like.
Okay, go ahead.
Before we even go to that, let's talk about what happened after our campaign with them. So we finished the campaign, our influencer campaign with them. Not only did we do a kind of a town hall thing that was going to be seen on their platform, but we also did some reels and some IG social media stuff, right? And the negotiations or the drop date was pushed back and pushed back and pushed back, and we're kind of like, okay, when we dropping? And then it dropped on a Monday, let's say, and then that Tuesday there was a huge payout from Wells Fargo.
Yeah, like a scandal or something.
Yeah,
we didn't even know about
for bad lending practices.
Yeah,
that we didn't even know they were in litigation for.
Yeah,
and then they wrote us back, hey, I know this is terrible timing. Sorry about that, but the damage had already been done.
Right.
You know what I mean? And so, you know, some of our listeners reached out to us, and like, you know, we had to eat that. And what all I could say at that moment was, we were based on our experience with Wells Fargo. You know, that's all we could really speak to anyway. You know, but we did agree that was wrong. That, you know, Wells Fargo had lending, you know, terrible lending practices or whatever they had did the settlement for. We had to acknowledge that.
Right.
So, you know,
and had we had known before, we probably wouldn't have done it.
No,
because a lot of times when you're doing these things with brands, it ends up being more headache.
Yeah.
Than what it's actually
Dude,
worth.
That 1,000%.
And
1,000%.
And it's crazy how sometimes businesses will use. They're using influencers.
Absolutely.
They're using influencers. You know what I'm saying?
They look at your subscriber count. They look at your following, and they hit you.
Yeah, but my thing is, like, you're going any influencer. I mean, any company that approaches us, like, we literally have the name Black in our name. Like, it's Black, married, debt free, and so, like, you're trying to reach Black people. But if you're trying to reach Black people, but then you have scandals that come out that, you know, your actual practices are discriminatory, leave us alone, please. You know,
we don't
leave
need
us
it.
alone. Like, I don't want to be used. You know, and anyway. But also, us having this conversation is us showing a level of accountability to our listeners and to folks that follow us. We never want to lead you all astray. We never want to do that. That's never our intention. And like, we see it on other podcasts where they have someone on who became a millionaire in 3 months, and it's just like, y'all not checking receipts out here.
Yeah, did y'all vet them receipts?
Like
for real.
Exactly. So like, we try to keep the conversation like, let's just be real. Like, what's really happening? You were successful. Okay, tell us how you did it, and then, you know, we check as many receipts as possible. So we do value our platform to where we're not just putting anybody on, and we don't want to just do any influencer deal. You know, I go to work every day, so my bills are paid. You know what I'm saying? And I don't need that. And I'm sorry, but so it's really us coming out, being accountable, saying we did do a promo with Wells Fargo, but now they're doing a ton of crap that we just don't agree with, and we're not going to partner with them again. Now, will I say I'll never use them as a lender? I don't know yet.
Give me some money,
you know, but at the same time, it's just like, maybe not. You know, maybe we as people as color, we need to do a deeper dive into Black banks, and we need to look at maybe these smaller banks or banks that are you know, as a part of your city or your local area, because really the only thing that these companies understand is money. And if I get a mortgage, I'm gonna pay them back, you know, a lot more than what they're giving me. So at the end of the day, like, we should.
That's a good point, Shaq.
We should be considerate of who we're going with. You know what I'm saying? Wells Fargo, I'm so disappointed. I'm so disappointed.
Yeah.
And so anyway, this news broke. I think it came from Bloomberg.com, and that's actually the article that we're currently referencing for this podcast. And so if you want to check it out, please do. So it's entitled, Wells Fargo Rejected Half Its Black Applicants in Mortgage Refinancing Boom.
What?
So fewer than half of Black applicants were approved by the biggest bank mortgage lender.
Let's talk about refinancing, because we've spoken a lot about a home equity line of credit. Refi is when your home gains equity, and if you own a home in America, if you've owned a home in America the past couple of years, you've gained equity. Oh, there's no doubt. If you could scroll down, I could see that number for what refis nationwide have been. I think it's in the $5 trillion. There's been $5 trillion over a certain period of time. Anyway, there's been a lot. Americans, United States wide, have been refinancing their home because interest rates were low and equity had increased. What can you do with your refinance money? You can make additions to your home. You can upgrade your home. You can send kids to college. You can invest in other ways, right? There's so much that people are doing with this money.
Yeah.
And that's why you have so many people applying and so many people trying to get that equity.
And it's not even to necessarily take out money from your house. You're refinancing many times to get a lower monthly payment.
Thank you, Shira.
So that's what a lot of people are doing. You're getting a lower interest rate, which means you're paying less over the life of your loan. So that means more money in your pocket.
Thank you.
So when you see that half of the black, applicants were rejected, whereas the approval rate for whites was 72%, for Asians was 67%, Hispanic was 53%. That's a problem.
Yeah.
Because that's a closed door.
Yes.
And it's really over the basis of race. And we know that it's race because in the article, the example that they give was a black homeowner who was an engineer who was married to a doctor with a credit score of 800. And so, they're looking at him, and at first it's like, yes, you should be able to refinance with no problem. We're going to be able to fast track you. We're going to fast track your appraisal. And they kept dragging his application out. And then they said, you know what? We don't think that they said perhaps the area is not eligible. So what are we doing? Redlining. So now they're saying that the area that he's in is not eligible for a refinance. And then they pushed it out so far that the interest rate had went up from what it initially was. And so that increase in an interest rate translates to thousands of dollars more out of his pocket, and so for me, this is very sad. And so now we can look at, go ahead.
Well, Shai, they pushed it out so far that his interest rate was going to be higher. And then it got pushed to the point where they came back to him and said, you were denied your application.
Denied. A black engineer married to a doctor with an 800 credit score was denied a refinance.
And he says they kept moving the needle. They didn't want to move forward for whatever reason.
That's housing discrimination.
But here's the most frustrating part. Because we almost experienced this with our last investment property. They can tell you whatever. It's like he said, for whatever reason. They give no reasons. There's no reason other than it's just because I said so. We had an issue and a discrepancy with our appraiser with our last home, to where the appraiser was doing an inspection. And he's saying, well, this sink needs to be done and this isn't that. And it's like, sir, we're doing our inspection.
They were about to deny our application for about a $10 to $15 piece for a very minimal repair.
Very minimal repair. And they're ready to throw the whole application away. And we're like, whoa. First of all,
after they approved it, they rescinded their approval.
They
rescinded the approval.
And I'm like, why is the appraiser all under the sink? Like, first of all, they had done drive-by appraisals for the past 2 to 3 years, and now they turn on an inspection appraiser. He's in the house. He's up under pipes and did it. Why did I pay for an appraiser if y'all gonna inspect? Why did I pay for an inspection if y'all gonna send the appraiser out to inspect?
But my thing is okay, if you send an appraiser out to inspect, and I guess in that state that's legal to do, okay. But my biggest issue with our last rental was that they approved it and then they rescinded the approval.
It wouldn't tell you why it wouldn't tell you other than this is
there's a part and I'm just said and
as
so
much as we
so
pushed
that
back.
Is when we name dropped and we said we just talked to such and such from such and such and and we name dropped.
We just did a campaign for you guys and you guys are gonna deny us, so we escalated it up.
We're gonna
escalate. We're gonna escalate your concern to this person.
It up. Mm-hmm.
And what did they come back and say? Tough. tough noogies. It is what it is. You got to figure something else out. We're not gonna change it.
Yeah.
So we ended up having to just back channel and fix the problem before we even owned the home, and then have the appraiser come back out, and luckily it worked out, but it was just a mess. It was a mess. And with this gentleman's scenario, it's just very frustrating because it's always for whatever reason. We don't know why. Why? And let's compare and contrast, Shire, because Wells Fargo approved 47% of black applicants, whereas all other lenders approved 71% of black applicants. Mm-hmm. So it's not that the applicants have issues, because if they had issues, then wouldn't that statistic reflect with all of the other lenders as well?
Exactly. Exactly.
So
I mean, you can look at, so part of this article, it has Wells Fargo, and then it compares all other lenders. If you look at all other lenders in general, they do have a higher approval rate.
Yes.
For every race, actually.
Yeah.
But it is significantly higher for black people. So that could mean, okay, well, if you are not approved with one, then maybe go to another. But
Absolutely.
then the other problem is that, in this example, this person had paid $560
Let's talk about that.
application fee. So why am I going to drop $500 application fee, excuse me, just to be denied on the basis of race?
Let's talk about that, Shire. I mean, because we've before we got into this whole financial space, we tried to refinance our condo, and we went through Quicken Loans.
Our condo?
We tried to refinance the condo, Shire.
We were trying to refinance, y'all.
We were trying to do what it do. And this is before we even paid off our debt and all that stuff. But we had to pay for the appraisal. And I'm asking the guy, you're on the phone with this person. It's like, bro, based on my application, should we move forward or not? Yeah, we should move forward. So it's like, cool. Well, that means it appears, just like they told this guy, it must appear like you're gonna be fine. Like, I don't see any red flags, nothing's jumping out at me. Let's go move forward. So then you move forward, you give the guy the $500, and it's denied, or the application falls apart, and they keep the money, because that's exactly how they did us.
Yeah.
And it's like, bro, you knew that there was going to be an issue before you took the money, but it's almost like they're strategically doing that, and they're making these are, of course, there's no refunds with these appraisal fees, and
application fees,
and so it's just very frustrating. It's very frustrating, man. So yeah, we had to speak on it.
Yeah, and so
what are some
another part in the article says that Wells Fargo, which declined to comment about individual customers, didn't dispute Bloomberg's statistical findings. It says it treats all potential borrowers the same. It is more selective than other lenders, and an internal review of the bank's 2020 refinancing decisions confirmed that additional legitimate credit-related factors were responsible for the differences. Really?
That's interesting.
Especially so basically it's
so
not
y'all
your,
just set
it's
apart,
not your
huh?
race. There's just some other legitimate credit related factors, but in this example, this person had really great credit and a great career, and it's just really disappointing, right? Yeah. It's really disappointing. It's not to say that if you're looking for a home loan to never go through Wells Fargo. I don't know if I am. I'm not really saying to boycott Wells Fargo. I'm not saying that, but I'm just saying that it is a challenge. Mm-hmm. And people, black people, we get it, right? Yeah. Sometimes other folks don't get it. Some things happen and it is race related. Mm-hmm. There are still discriminatory practices, and when you're dealing with a big entity, it's hard to just say it's one person's fault, because we could deal with one person, right? But when it's
systematic,
that's another issue, and it's just really sad to see, and it's really disappointing. But even with that being said, don't get discouraged. Even if you have to go with another lender,
man, there's always somebody, and don't despise your local banks, because they're just waiting for people to to kind of partner with them. A lot of times we run to the biggest names when it comes to lending, but sometimes the credit union up the street will get you right, you know. So don't think that there aren't alternatives, or or there aren't other ways to get what you need to get, because there are. So we encourage you to look at those other avenues, and shout out to Killer Mike and Greenwood Bank, and there's some black banks that are out there as well. So we definitely want you to look into those, and there's always a way. There's
always a way. Okay, who said that? Tommy
from Martin.
Well, he said there's always a way to get what you can't afford. We're not telling you to do that. We're not saying get stuff you can't afford, but there is a way. You say, well, there's a will, there's a way.
Right.
And that you can still do what you want to do in spite of the fact that these types of things are still happening in 2022.
Yeah, sorry, it's frustrating. I'll take that.
You're trying to get them. Okay.
Yeah,
he's trying to get the mouse because I'm scrolling. I'm like, he's touching on my leg. I'm like, what's going on?
Shy over here surfing the internet.
What's going on?
But Shy, any final thoughts or anything on this? Like we said, I guess for me, sorry, I'm asking and answering your question.
Go ahead.
But there are other lenders out there, so just kind of do your due diligence. And there are actually websites where you can put your information in, and we'll give you a host of lenders, that kind of compare one to the other. So yeah, it's unfortunate, man, but we had to speak on it.
We had to speak on it.
We ain't bought by nobody. Like that's what I love, Shy, about I'm not a full-time influencer, and I don't want to be.
Marcus, that would be nice. One of these days.
It's not for me, because one, like you said, you get into these campaigns and you're like, dude, we're 100 emails in for this amount of money.
It's not. Yeah.
So the next time somebody sends you an email and asks what's your rate, it's a lot higher than the last one. But thank God we have other ways of producing income, and this was never this is influencing and being in social media was always extra, so I think that's a cool position to be in, so, but that's just us, that's just me and Shy, that's not everybody,
right? And we're gonna try to keep it honest and transparent. Unfortunately, I have to say, if I could go back in time, I would not have done that. Right. I wouldn't have sat down and talked about barriers to home ownership, or I would have been more vocal and said, actually, you're the barrier. Just called you out. And if, you don't want to pay me. You're the barrier, and really have taken that opportunity to just tell them to their face, but unfortunately scandals come out later, and then this came out later. But it's another thing to just be aware of. Do your due diligence, even when you're working with companies, and also when you're having guests on your show. That's something that we're always mindful of. But like I said before, don't be discouraged. No. Whatever you want to do, if you're looking to purchase a home, you're looking to get a rental property, you can still do it. And Absolutely. You're going to do it in spite of. Absolutely. Yeah. I love that, Shy. Well, we'd like to thank you for checking out another episode of Black Married and Debt Free podcast. This is Marcus Murray, and I'm in here with my lovely wife, Shira. And we're going to holler at y'all on the next one. Peace. Bye.